All right, team, good afternoon. Welcome aboard to another video of our weekly market recap and preview of the next week. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Glad to have you here. Every Sunday we do this video, unless we have a video on Monday, holiday on Monday, then I don't do a video. I do the video on Monday. Speaking of holidays, happy Father's Day to all who celebrate. Thursday, just a reminder, on Thursday, the stock market is closed for the Juneteenth holiday. So no stock market trading, nothing. I wouldn't even do futures either on that Thursday. So just understand that we have 4 trading days this week, and we also have the FOMC Federal Reserve rate decision. That'll be on Wednesday with Jerome Powell, who's the chairman of the Federal Reserve, and his press conference. So we will have something to work on, and of course, as you know, we've had this volatility in regards to the Iran-Israel conflict. So let's go ahead and get started and talk about it and see how we can prepare for the week to come. All right, first thing I want to do is start with the S&P as usual. And as you know, on Friday, we did have these headlines in regards to the Iran-Israel crisis or issues, whatever you want to call it, war. I mean, really the surprising thing is if the Middle East ever had peace, it's always at war, unfortunately. And I'll show you exactly proof that it's always been conflicts, and the market adjusts, and the market takes a dip initially, and then what happens? People tend to forget things, and let's be honest. People's attention span is pretty much an all-time low. We can get our news so quickly: 30-second reels, 15-second reels, 2-second tweets to read, headlines. People don't read articles anymore because that creates context. Headlines is what people get, and that's what the market trades with these algorithms. So understand this is not the first time that we've gone through this, and this certainly will not be the last time that we go through this. So, but let's go ahead and start with the S&P. First thing that we see here is that we had this rising wedge. This is the S&P 500 futures index. Again, important to us because we trade it, and we bounced off the 20-day. But see how that wedge, and right when we got to that wedge, that's when the headlines come out. Come on. Right near 6,000. I mean, that was an excuse, it sounds like to me. And if it was really that much of a concern, I believe we would have been way worse off and been below 5,900. But we held on. We closed above 60.30. Let's take a look at the weekly and see if anything stands out. Not even near a moving average. That is any issue where we're looking at some kind of at least short-term support or something like that. 57.84 is the 50-week moving average, and we're quite above that. So back to the daily again, we're above major moving averages, but again, we're below this kind of wedge, and this is a bearish formation. So technically speaking, if you were looking at your trading textbook or any book you read, this will pull back. The good news is that we're above the 20-day. So let's keep 59.55 for now as a key level to watch. That is going to be our 20-day moving average. If we go to the 1 hour, you can see how choppy it was just the last couple of days, but we could see just a downward trend, at least in the short term, in that 1 hour. We can use 60-40 as kind of resistance. I put a couple levels of alerts, 60-25, 60-35. I'm going to put 60-35 as the first. If we can get above there, then maybe we can talk about playing that momentum back higher. But for now, it seems that 59.20 is a key level as well. I wrote that as well, but you can see how we got near it now, 59.26. That was overnight on Thursday going into Friday, and then we had that bounce going into Friday morning. So a very tough tape, as we know, with all the headlines coming out, missile strikes and such. Let me go ahead and get to this. This is how stocks fare after major events. We can go back since 1940 when Germany invaded France. Then you have Pearl Harbor attack, North Korean invades North Korea, Suez crisis, Cuban Missile Crisis, Kennedy assassination, Gulf and Tonkin, that was Vietnam. I've had this discussion on video before, where we've had bad things happen, and then we talk about, oh my God, what happens now? The world doesn't end. It's, if you notice, tide goes in, tide goes out. And you could see on average, when you have these major events, and the last one, Iran missile and drone strike on Israel, that was April 13th, 2024. So this is not new. And look what happened a month later. Up nearly 2% on the S&P. 3 months later, up 10%. 6 months later, up almost 14. And about 12 months since that April, the stocks have been up 5.3%. Granted, remember Liberation Day with the tariffs and everything? That was April 2nd. So that is included there. So knowing what we know about the past of all of these major geopolitical shocks and events, oh no, we get volatility. Look within the 1 month period. On average, since 1940, with all these geopolitical events, 1.1% down. And then the median, right in the middle of the data, 0.6%. So 45% of the time, we'll just call it 55% of the time, stocks go lower within a month of a major geopolitical event. Okay, we just had this on Friday. So if we just go by the baseline, we're going to say the next 30 days are going to be red 1.1% on average. But let's expand it to 3 months. That gets us on average of green 0.3%, 65% of the time. Go another 3 months, it's up 2.8%, 60% of the time. Go 12 months, average is up 3%. If you go right in the middle, median data, 7.4% gain, 65% of the time. So if you take all the years, again, you have your averages, you have your median higher. But if you go 12 months after a major event, the only thing that would stand out here in terms of what major of catalysts and events really hit the market, Yom Kippur War, that was in the 70s, stagnation, oil embargo, we also had the Reagan shooting, 16%. That was a double dip recession. The USS Cole bombing in Yemen. That was a 2000 dot-com bubble. 2001 9/11 terrorist attacks. As we know, that was the second double dip. And then in 2008 was the Lehman Brothers collapse. That took over a year to that recover. And then we had some other ones too. Some recent ones was the U.S. pulls out of Afghanistan in 2021, and then Russia invaded Ukraine. If you remember, 2022 was a bear market. So we went ahead and drew up an article talking about the last 5 instances that we had some major events and what happened after the fact. So we'll give a little bit of more context. Again, take a look at GAR articles on our Discord server. It's scrolling at the bottom. We have our options recap, and we also have our futures recap. If you were looking for that details, just click on there and it'll get you there to our website. We'll go ahead and just click on options. Oops. Here we go to the website, and then I'll just bring this up and you can see the article here. And again, these articles are free. We also have a Father's Day flash sale, lifetime membership. Use promo code Father's Day 2025. For all the fathers out there, you don't have to be a dad to take advantage of the deal. But again, we'd love to have you on board trading with us. Okay, so we went over S&P. We talked about the moving averages. Let's take a look at gold for a second. And of course, as we know, gold has soared because of the geopolitical tension. Now, I don't have a chart on how gold has been done, what gold has done in comparison to the S&P with these major events. But if you could take a look here for a second, possible triple top? Probably not. So more than likely, we'll probably get to 3,500, round number theory, see some profit taking, maybe retest 3,342 if the S&P does bounce back, if we get a little bit of a reprieve from the 769 point down day that we had on Friday. To me, honestly, it just seems like an excuse, again, a reason to de-risk after everyone is pretty much waiting for all-time highs. So are we. Could see just this big boom that we've had really since the lows of April 7th. It's been about now 2 months since the lows, and we are now again 60-30 currently. That was what the close was on S&P. You could see the 1 hour chart. 59.78 is what we show again after hours when we got a little bit more of a dip right at, when was this close here, 1600, and then we got a little more downside. So we'll see how we open in about 15 minutes. But again, on Sundays, it hasn't been an easy trek. So I'm not really pushing the envelope here, especially in a short week, especially with all these headlines. I think the assumption is that with all these headlines, war headlines, that we're just going to continue to sink lower. We're going to get that wedge and break down, profit taking. Here's the excuse. But this market has been rather resilient, and that's my concern. So it's not going to be as simple as just press the sell button and then we're going to make money. We have to be very careful because we do have a Federal Reserve coming this Wednesday. And I'm not saying they're going to cut rates. That's not the expectation. But the language they'll use on the press conference, any hint of a possible rate cut in July is my expectation. I do expect that'll be a catalyst for stocks to go higher this week. Let's take a look and see what we have coming up. We have core retail sales on Tuesday. We have Empire State Manufacturing Index. Amazon also has a cloud infrastructure meeting. Let me get the details of that. I do have Amazon calls open, so let me read it here. Amazon kicks off its AWS Reinforced Conference in Philadelphia this week, creating a potentially significant catalyst for the e-commerce cloud computing giant. This annual event is a major catalyst for Amazon shares, whose past conferences frequently sparking positive momentum for the stock. So I'm going to post that under Market Watch for our traders. This was from the investing.com app. So I'm going to go ahead and share it so you guys can actually see it. But back to the calendar for the week, we have core retail sales and retail sales on Tuesday. This is going to be very important. I'll segue that in a second. Unemployment claims, we get that every Thursday. It'll be Wednesday because Thursday, the market is closed. Federal funds rate, 2 p.m. Remember, 2 p.m. is when the federal funds rate decision is made. The expectation is no change. No change is the expectation. If we get a cut, I'd be extremely surprised, but don't hold your breath. The press conference will be key from 2:30 to right around 3:30 for about an hour. It's going to be all on Powell, the Fed chairman. After that Thursday, we have the day off. Everything's closed. And then Friday, Philly Fed Manufacturing Index, rather quiet in terms of economic data. It's really just a Fed and retail sales. Let's go ahead and take a look now at the calendar. This is I'm going to go ahead and take a photo of the stock market almanac for everybody. There we go. All about being visual here. All right, this is what I was talking about regarding Amazon. This was from an article on investing.com. Amazon was the stock to buy that they had, but I already have calls, so it doesn't really matter. But again, talking about AWS Reinforced Conference in Philadelphia this week. Again, if you guys want to see that, the 3-day AWS event in Philadelphia might be that catalyst to push Amazon higher. Again, we still have calls. June 2025, again, as we can see here, Tuesday will be a bear day according to the... Oh, do I have the wrong dates? I'm a week ahead. Excuse me. Let me get the right one. Okay. Shoot. I'm just too ahead. Let me go ahead and delete this here. This is the week after. All right. We'll go ahead and take the right photos this time. So we are on the 16th. We have a triple witching on Friday. Let's take a look at it together. Let it load on Discord. There we go. All right, to see the 16th, we have a bullish day. So maybe recovery tomorrow after kind of the de-risking on Friday. That makes a lot of sense. I actually expect on Monday market to be green. So I think we may have a little bit of weakness on Wednesday with the Fed. We just got to be careful what he says. And then you have a holiday the next day. I don't know if a lot of people want to go ahead and hold risk. But Friday is quad witching day, OPEX day. Doesn't mean we'll have volatility. It doesn't mean anything guaranteed. It just means that we might have heightened volatility. Might. I mean, we had heightened volatility this past Friday, so it's nothing new to us. We'll see what happens then. But in terms of the stock market almanac, really just tomorrow being a green day. And I think that kind of makes sense after Friday's kind of de-risking. Maybe people are going to probably buy the dip. Let's see. Okay. Let's go ahead and get back to the rest of the week. Earnings calendar, not much going on here. Lennar, I mean, that's the only one that kind of stood out there. But I think we're going to skip this week in terms of earnings. There's nothing out there that's really worth trading, A. And B, there's nothing out there, at least in terms of wanting to put some capital up a risk when Thursday is closed. Probably not. So again, earnings is kind of already over. Again, if I see anything, I will let you guys know. We also put the watch list up for our options members. We'll see what happens then. Let's go over a couple of names that we are holding in terms of options and see what we got. All right, let's take a look at Hood. Hood is a name that we have a target of $80 per share. This was part of our, give me a second here. See here, stock price earnings here. You can see that we put, this was on May 12th when stock was at 56. We put a target at 80. This is a 12-month price target. We're at 72.60. We're right there. We should be able to get there. Nice breakout here at 63. Again, just all this noise that we've had. Well, really the noise that we had was the Iran thing, but 70 and a Israel thing. 77 is what we need to break on Hood. We got some time on those options, so that is for not this week, but the next week. So we should be okay. I think we'll get that push. Nvidia, we need to get that push above 145, 150 looms. Do we get there, or is this the wedge that the S&P is breaking down as well? 145 breaks, we should be home to get to 153. Our calls should hit. I still expect that to go. Amazon, like we talked about just a couple minutes ago regarding the AWS catalyst, right near 212. That's a level that we retested of support. We broke below it. And now possibly an inverse, head and shoulders on the 1 hour. Can we get that pop to 215? That's what we need. 215 on Amazon. Can we get the push? Will that AWS catalyst get us home? Uber is another name that I have been watching carefully, part of our stock price as well, our stock price ratings, excuse me. And Uber, we had a current price of 85. It's now below that. We have a 12-month price target of $100. That's a 15% upside. Nothing really outrageous. But we did have a setup of a bull flag. It pulled back. This one is kind of testing some support here. Possible inverse, maybe. Let's look at the daily. Still holding that trend line up. You can see that it did break out of 82. We'll draw a line here to give us a little bit of context. How's that? See that right there? Reverse, false breakout, reverse, false breakout. Breakout, pulls back, and then we should get that next leg higher. So as long as we stay above 82, I think Uber is just fine. And we got one more silver. This is for longer dated. Silver looking good. Another bull flag. Yes, this will have tons of gaps. GLD and SLV will always have those gaps, so try not to put too much emphasis on them. I do expect silver to move higher just for the fact that you have the technical patterns. Just stay above 31.42. But again, that bull flag looks like we're setting up to go to 34 this week. If we get a very dovish Fed, meaning the Federal Reserve is going to be pushing a cut, I don't know if that's the case, then we'll see if silver and gold push higher, meaning the dollar will go lower. The dollar is going to be very key this week because now we got that Fed. Let's see what they say. And we're getting mighty close to some very, very key levels of support. Look at the monthly MA right at 100 month moving average. It needs to hold 96.65. If it doesn't, and the dollar pulls back below that, commodities are going to push higher. Gold, crude, maybe Bitcoin, but really gold and crude. Silver will push higher, maybe copper. But again, you can see the dollar is testing some levels that we haven't seen really since 2021. So let's see if it holds that trend line. The dollar is really a confirmation of confidence in the American economy in a sense, if you think about it. Can't have it too high, as we know, we've had that before, and we can't have it too low either. So it's all about balance in this world. Let's see if what we get with it. So that, again, something I'm watching very, very closely. We're about 5 minutes away from the open in terms of futures. Let's see what happens at the open. Again, my expectation is possibly a little bit of a pullback. I don't know if we'll break below 59.55, which is that 20. If we do break below it and we have that scenario of additional weakness, we need to see if 59.20 holds, but 59.55 is the 20 on S&P. Let's see if that holds. Let's take a look at NASDAQ rather quickly. 20,902, very key level of support as well. You can see 22K, kind of that level of resistance, kind of like where we are with 6,000. Holds that 20, but it is doing that wedge, breaking down a little bit. It's all about to be this Monday's open. Because the last time we had some overnight weakness, they were bid up on Monday as everyone started closing their positions. So we kind of went over what happens when we have these major geopolitical catalysts or events. Obviously, things work out in the end, but short term, some pain. We need to be ready for any scenario. So if you are watching NASDAQ, take a look at 21,550. That's your 20-day. If that breaks below, 21,000 is next. But ES is something I'll be watching very, very carefully this week, and stocks as well. Again, short week. I wouldn't want to trade on Thursday anyways with futures, even though they'll be open. It'll be open only till 1 o'clock in the afternoon and then roll over for the 6 p.m. session. So that's where we are currently. Again, pretty tough in terms of those kind of headlines on Friday. You really don't know what you can do because anything can happen. The prices are so sensitive. in terms of stocks, in terms of contracts, futures contracts. So you just have to kind of really be patient and find kind of that clean shot of momentum up or down. And it's all about, really at the end, it's all about scenarios. It's all about what happens if this happens, what happens if that happens. If we break below 59.55, okay, fair enough, we can start moving. If we break above 60.40, then we can start moving for a break higher and march towards all-time highs. So either way, with futures, we'll get our opportunity. In options, I think we're looking pretty solid. But again, good thing we have time on these. We'll take it step by step. But a little relief rally, a little bit of relief bounce is expected this week. Even with all this craziness, the VIX was only at 20, 21 nearly. So nothing too wild. Forgive me when I say I can't say I'm too afraid in terms of what's to come. First 2 weeks of June are wacky. Next 2 weeks of June, maybe we start getting a little bit of a move higher as we prepare for July, which I expect is the money month for me personally. I think that's where we start getting all-time highs. Can the Fed get us there? Do we get a tax cut? Remember, liquidity is key. We need that tax cut if we want stocks to go higher. That's what it's all about. Let's see what happens this week. Again, short week. Just keep expectations that we might chop around. It might be a little slow on Wednesday as everyone is on a pause ahead of the Fed, ahead of the commentary from Powell. Thursday, the market's closed. So Monday and Tuesday, yes, we'll probably get some action. Wednesday, rather quiet. Thursday, market's closed. Friday, we'll have quad witching. A lot happening, but we're with you all the way. Thank you so much for taking the time. We got 2 minutes until the market is open. So I just want to say here before the next 2 minutes, and I'll report you the prices. Thank you so much for being part of GAR Capital. Almost 11 years. It'll be 11 years in October. Appreciate every single person here. Again, like I said, we do have a deal running on our lifetime membership service. Go to our website, www.gar.capital. Here is the website. Again, all the articles that we do have. These are all free. Feel free to take a look at them. And the promo code is Father's Day 2025. All right, we got about 90 seconds left. Let us see what happens at this open. The expectation, at least for now, is that we'll get some weakness. You can see the pre-pricing here, not much going on. All right, we're about 60 seconds away. Let's see what happens. All right, we got about 40 seconds until we open up futures. Again, last week I had a little bit of a struggle trading futures on Sundays. Sunday evenings are just tough lately, so I'm going to skip the trading and learn my lesson, not do anything on Sunday evening. Sunday evenings are for prep. Here's part of it for you. So again, we're about 20 seconds away from the open, and then I'll take a look at some price action and see if anything stands out. I saw the weekend Wall Street. This is through IG, which is kind of CFDs, showed that the Dow would be down, I think, about 180 points. Gold is pushing higher. Those are my alerts. A little ahead of time, so maybe 3,500 comes. 34.72. We got 6,008 on ES. Gold, we're getting some profit taking rather quickly. How many people were long gold over the weekend expecting the worst? Maybe gold pulls back a little bit here. Let's see. How many people were short the market over the weekend expecting the worst? They're probably closing up their positions. Let's see. The most important thing here is that we're watching and waiting. Crude oil is up 4.33%. So obviously some kind of news relating the Iran and Israel conflict, but not exactly limit down either. Yes, S&P is above 6,000, off lows. Gold is up a quarter point. Silver's flat. Gasoline's up 3%. Copper's down 1.39%. And that's where we are currently. Gold being up 0.30% is not showing me the world's ending. The fact that the dollar's up is actually a good sign. So, let's see if this bounces back. I would not be surprised if by Asian session, 10 o'clock, 11 o'clock, we might be maybe a hint of green, a little bit. but we'll see. All right, team, we'll leave it there. 6:01 p.m. Thank you so much for joining me again. Have a great rest of your weekend, and I will see you on the server. Cheers all.